There's so much pain in my body, it's like that old town road, yeah. And I don't think they can stop me, cause to the top, yeah, that's where I go, yeah. What's going on, YouTube? It's your boy Quade Adventure back with probably one of the most important videos I'm gonna make. And before I even start this thing out, big shout out to Day Trading Addict, man. Big shout out to Day Trading Addict. If it wasn't for him, I wouldn't even have this video idea, right? So this video is probably gonna be the 25 laws of trading. And I basically use the same loot. So these are Day Trading Addicts laws, but I'm just giving y'all the laws as well to, for one, reach another audiences, for two, to give my perspective on them, because he has his own reasons for using those laws, and I have my own reasons for using those laws. So you can get two different perspectives on the 25 most important laws of trade. Like, if you follow these laws, or if you're already following these laws, you probably will find yourself in a position as a trader to where you damn near about to make it, man. But let's get right into number one, man. And number one is staying conscious. Your subconscious is what your emotions are ruled by. And the moment you become emotional about the charts, you're no longer conscious, and your subconscious is taking over to try to help you, but it's actually hurting you. So law number one is staying conscious. As a trader, you have to be very conscious of what you're doing, because when you in your subconscious mind, I mean, let's look at it like this, all right? Say for instance, this peppermint, right? This peppermint is your conscious mind. And your conscious mind is your subconscious mind is this entire room. All right. So what that means is your subconscious mind has a lot of control over your actions, which is why most people fail at Forex, because they don't realize how much power your subconscious mind has. And once you realize your subconscious mind is probably the most powerful thing, and you have to put rules in place to not only keep you conscious, but avoid going into that subconscious state of where your emotions are ruling you in trading. So that's number one. You have to stay conscious. Number two, accept everything the way it is. You're going to lose, you're going to win. You got to accept it and don't deter from the plan. All right. You got to accept what comes with trading, bro. You got to accept that you're going to lose. You got to accept that you're going to win. It's not going to always be 100% wins, 100% losses. And that's where that objectiveness that's going to be talked about a lot comes in, because when you trading from a subjective standpoint, right, it's very hard for you to follow the second law, accepting everything the way it is. If the market is showing you that it's no longer bullish and is now bearish, if you can't accept that the fact and you trying to stick to your bearish bias, you're gonna lose it, maybe a tremendous amount of capital trying to catch a move that's reversed already. So that's law number two, man. You got to accept everything the way it is, man, at all times. Number three is stay consistent with your plan and be repetitive. I remember, when I first started trading, right? I really wasn't I really wasn't like repetitive or consistent, you know what I'm saying? I was and I think this happens with a lot of beginners, you know what I'm saying? You happen to jump from strategy to strategy to strategy, trying to find what's right. There's no consistency in jumping from strategy to strategy to strategy, man. There's never no consistency with it. And what I've learned is I became the most disciplined trader when my whole life became consistent and repetitive. Because if you working out consistently and repetitively, if you doing work consistently and repetitively, if you're doing YouTube stuff consistently and repetitively, if everything in your life is consistent and repetitive, then trading, it will be a lot more natural to incorporate that into a consistent, repetitive a part of your program. Number 4 is trade. This is rule number 4, law number 4. Trade with a peace of mind. You do this by limiting distractions while you're trading. Trade with a smaller percentage of capital. This is really important too, man. It's hard to trade with a peace of mind if you just got into an argument with your old lady or your mama, your brother. What you have to understand is when you have arguments or discussions like that, it's best to step away from the charts, for one. And for two, we all have I'm gonna get deep into this too, but we all have a emotional monetary attachment, right? So that puts us in a position to where we are very likely, as humans, we are highly likely to become emotionally invested into trading, because trading is nothing but, it has everything to do with monetary capital. So the easiest way to trade with a peace of mind is to risk a lot less than you normally would. So you won't be in a trade where you risking half your account, right? You risking 40, 50 lots. Your account could be blown if this trade don't go the right way. Of course, you ain't gonna have no peace of mind. But if you're risking $4, $5 on a $200 account, it's gonna be very easy to be like, this trade can do whatever. I already know I'm only gonna lose about between $4 to $5. You know what I'm saying? So that's law number 4 right there, man. Law number 5: create good habits. Let me tell y'all something, man. It takes 30 days to build a habit. If you can consistently follow your trading plan for 30 days, you will have successfully built a habit to follow your rules. Now, your rules may be different than my rules, but I want everybody to try that, right? Try to be consistent with trading for 30 days, because let's be honest, right? A lot of y'all can be disciplined at trading for a couple days. Y'all, it's real easy to be disciplined when you're winning. Oh, I'm real disciplined. I'm consistent, man. I done had 3, 4 winning days. What if you had 3, 4 losing days? What's the motto then? Make all the money back? You got to be thinking about stuff like this. And I want y'all to try, do this. Set an alarm in your phone. Right, have your rules written down and set an alarm in your phone. And the alarm tells you to read the rules and try to follow them rules as best as possible for the next 30 days, and see if your trading don't take a change after them 30 days. You may not even have a profitable month. It may be a losing month. But all that should matter is, were you disciplined for those 30 days or were you not? And speaking of discipline, that's what number 6 is. Law number 6: work on your self-discipline. I ain't become disciplined at trade until I decided to be disciplined in all areas of my life. I started working out every day. Only ate twice a day. My life was on a pretty strict schedule, and that's when following my rules became a lot easier. When I was first trading, right, before I became consistent and disciplined, it's like I was trying to be disciplined with trading, but I wasn't working out. Only thing I was doing was going out, making a little money, coming home, wasn't working out, you know what I'm saying, playing a game or watching anime all day. I wasn't consistent in my life, man. I wasn't disciplined in my life. So you have to be a self-disciplined individual in all aspects to make it in trade. If you ain't disciplined, how you do, the phrase they always say, how you do one thing is how you do everything. And that phrase is probably the truest phrase ever. I used to think, man, I ain't really got it. I could do all this other stuff after I start making it on trade, because then I have more free time. No, you got to make time to do stuff now. If you can't make time to, you ain't gonna be blessed with none if you can't even make time for nothing, man. You know what I'm saying? Like, It's bottom line, you know what I'm saying? Law number 7. Law number 7. Eliminate fear by conscious practice. Being self-aware of the fact that fear is biologically hardwired in you is the first step. Self-awareness is the key to a lot, because once you become aware of what makes you emotional when it comes to trading, you can create rules around solving those issues. So it's pretty simple. Being self-aware, and self-awareness is really a real key factor, because most of the time fear stems from the unknown. You know what I'm saying? It's not known whether I'm gonna be a successful trader or not. It's not known whether this trade is going to lose or win. But fear is also, I would consider it very subjective. And the reason why is because look at objective stuff. You don't fear that the sky is blue, right? You don't walk out in fear, oh, what if gravity stops working? It's a proven fact that gravity is going to forever be here because of how our solar system is designed, right? So most of the time you fear the unknown. So once you back test your trades and have an objective view, right? You back test 100 trades, right? Back test 100 trades. Okay, now I see that I'm 75% accurate, risk to reward of 1 to 5. On average, I made a 40% return in a month. Or over the course of them 100 trades, I made a 40% return. Then well, maybe 25 to 30% of those trades are going to lose. 70 to 75% of those trades are going to win. So now that you know that's an objective statistic, a fact, there's no reason to fear something you already know. Okay. Number 8, always fully commit. You got to give it your all, man. 100% of traders that give up never become successful at trading. That's a proven fact. 100% of traders that give up never become successful at trading. Proven fact. Understand, why are you even trading? You know what I'm saying? What fueled me to commit to discipline was losing people I cared about a lot. And yeah, them people still alive. I used those negative emotions and turned them into positive discipline, because we all know that energy can't be created nor destroyed, can only be transferred. So that's rule number 8, man. You got to always fully commit. You can't be half in, half out. You can't be like, I want to do trading, but I ain't making no money. I got work to do, so I ain't got time for it. No, man. You want to become successful at trading, you gotta go all in with this, man. For real. Law number 9. Trade small to reduce fear. Most people naturally have an emotional attachment to money. Spoke about this earlier. Why? It's because we need money to survive or become successful. And so the problem with a lot of traders comes from a lack of awareness as to why they fear certain outcomes when it comes to trading. And it usually comes from emotional attachment to money. And the way I solve that problem, which solves sub problems like overtrade, revenge trade, FOMO, et cetera, was starting to risk half the capital I used to. Instead of risking 1%, I only risk about 0.5%, usually 0.25% per trade. Sometimes I end up risking 0.5%. That'll be because of spreads. It won't be because I naturally want to risk 0.5%. I try to only risk 0.25% to make it, and it makes it a lot easier to stay out of that fear, to stay disciplined, because I'm risking smaller, so capital loss doesn't really affect me as much. Law number 10, Law number 10 is never stop constantly improving. As a trader, you constantly have to find solutions to problems, and in your life overall, to make trading become easier, you have to improve your life in every aspect. Eat better, work out more, get off social media, do whatever it takes to lock in on every aspect of your life. And once you start improving in those things, you'll naturally start improving in trading. And don't worry about the time it will take. Your goal should be in some form similar to mine, to become the best overall version of myself that I can ever be in life. That should be your goal as a human. Become the best version of yourself. You have anything less is out of the question. And that's what I used to become a disciplined person overall, because I realized I don't want to just be a great trader. I want to be the most fit person I know. I want to be the best trader I know. I want to be the best YouTuber I know. I want to be the best in every aspect of my life. You know what I'm saying? Law number 11. Learn to be realistic. This goes into what I said earlier about not putting a time limit on your trading goals. A lot of the times people say things like, in the next 30 days, I'll be a 6-figure trader. Then when it don't happen, then what? You're going to give up because what you manifested didn't come to reality? No. What's going to help you with trading is being realistic and not rushing yourself. Because the moment you try to rush because the moment you try to rush to success, you subconsciously put unnecessary pressure on yourself to make this goal happen quicker than it naturally would. And then your subconscious mind will start looking at every losing trade as a hit to your success, leading to horrible emotional decisions, when the reality is everybody's going to lose trades. You got to stay rooted in reality. Your emotions, how you feel, what you feel should happen, your feelings, they don't matter at all when it comes to trading, bro. Fam, ma'am, sir, it doesn't matter. Your feelings don't matter when it comes to trading. You have to be as objective as possible and stay rooted in what's real, reality. The reality is the markets don't give a damn about you. The reality is the markets are only displaying information based on the economy of different nations' currencies. All it is displaying information, objective information. So you got to take your feelings out of what you think should happen in the market, what I feel should happen in the market. That don't matter, bro. It just don't. Law number 12, man, is always take the right trade. This is why having a set rules-based system is so important. If you don't have entry criteria, on why you should enter the trade, you will never know what's the right trade. Everybody already know my rules, and I stick to them every time I trade. No ifs, no ands, or no buts, because that's what's proved profitable and proved my edge over a series of maybe over 1,000 trades, which includes backtesting and live trades. Because of these strict trade rules I have in place, I never have to hesitate on a trade, because I know over a long period of time, taking these exact setups that follow my rules have what proved profitable over time, man. All right. To be able to take the right trade consistently is having rules that have boosted your confidence, man. To a point to where, over a period of time, you may have losing trades here and there, may lose, 40% of your trades. But because of what your risk to reward is and this, that, the other, whatever come along with your back tested results, you're going to be profitable in the end if you just follow the plan. Law number law number law number 13. Know your stats and numbers. This is why backtesting is so important. You got to make sure your rules and regulations you've placed on your trade can stand the test of time to build your confidence up. I tell everybody, man, backtest minimum 100 trades per pair that you want to trade. Find out your risk to reward and win rate on each pair. That will show you whether or not, find out your risk to reward, your win weight. Wait, win. I keep doing win weight. No, nigga, win rate. My fault. Find out your risk to reward, your win rate, and your overall percentage gained over those series of trades. And that will show you whether or not your strategy is profitable and will also boost your confidence in your strategy, man. All right. Law number 14, never trade a strategy live that doesn't work. This goes back to the importance of backtesting. This bring me back to what actually drew me to smart money, man. I used to use the cash trap strategy from IML, right? I used to use that cash trap strategy. Man, when I first transitioned to Forex. But I was like, man, I just keep losing trades. I thought this worked. Well, yeah. The cash trap strategy may have worked for HFX because it was HFX is obviously it's quick, minutes. You in for a minute, you get out, this, that, the other. Everybody know what HFX is. But when I took time to backtest that same strategy, well, the data showed me that strategy was not as profitable as I thought it was over a series of trades, which led me to find new strategies and doing the same thing over and over and over until I finally came across MintFX and other smart money people. Got to give a real big shout out to MintFX though, man. If it wasn't for him, I wouldn't know probably 95% of the information I do when it comes to the skill. You know what I'm saying? I say 85% because I learned from other smart money traders too, but I mainly used all his concepts, But when I found MintFX, that gave me the edge I was missing, man. And this also proves to me why smart money concepts is so needed, so much needed, and one of my favorite ever will always be probably the only strategy I use because it not only is it a profitable strategy, it also incorporates rules that you have to follow to even trade the strategy correctly. So, law number 15, fix your inner self. A lot of times, people believe they aren't seeing success from trading because the strategy is ass, or they psychology bad, or they just too damn emotional. When the reality is, overall, you just may be a person who don't give a damn about yourself. If you wake up in the morning, trade, and then you play the game all day and don't do anything productive, your inner mindset has no discipline to it. But if your whole day is structured to a point where your inner mind only thinks disciplined thoughts, whether you feel like doing something or not, trading will be a whole lot easier. What it took for me was a traumatic experience, and instead of letting those piled up negative emotions consume me, I turned, like I said earlier, that them negative emotions into, I would say, disciplined. I turn them into discipline, transfer the energy into discipline. And that's what really helped me, man, because I keep looking at my laptop, man, to make sure I look all right. But that's very important. Doing stuff whether you feel like doing it or not. I want to touch kind of on to that topic before I go to rule number 16, right? Law number 16. If you only do stuff because you feel like doing it, you never gonna be a successful trader. You know how many times I feel like over trading? I don't feel like getting off the charts. I don't feel like working out. I feel like entering this trade because it's about to leave without me. You know, if you only do stuff based off of emotions, especially when it comes to trading, you can't be a successful trader, bro. If you fix it, you definitely can become a successful trader. But if you have those issues where, man, I don't really feel like getting off the charts yet, man, I'm gonna just take one more trade. You have no discipline to yourself, and you got to work on your discipline. Start working out, do that every day. Start doing stuff every day that you normally would pass off if you didn't feel like doing it. Number 16, track your behavior. This was important in one of my phases to becoming disciplined in trading. This is also what led me to create my rules. Being aware of what makes you tick and what makes certain causes and effects happen is important. Say, for instance, if I know that whenever I over leverage, I tend to over trade, what should I or could I do to fix that? Lower my risk. Problem solved. If I know that whenever I don't feel like trading and I still trade it, it usually results in a losing day 9 times out of 10. How can I fix that? Stop trading on days I'm not in a correct headspace to trade. You see, being aware of these certain flaws and habits you may have can lead you to create psychological rules to deter from those habits if you pay attention to yourself as a person. Law number 17, don't do things to lower your confidence. Confidence is a very intrinsic topic when it comes to trading. If your confidence is too low, you might not pull the trigger on trades that may have been huge winners. If your confidence is too high, you may fail to change your buys even when the market is showing you that it's about to go the opposite direction of your buys. Your confidence has to come from a very objective place, which has resulted from multiple different experiences that have created your sample size of back test and forward test. It has to be confidence to where I know the course over 100 trades, between 60 to 70 of those will be winners. And out of those 60 to 70 winners, they will all have an RR of minimum 5. That's where your confidence should come from. Not what you think or what you want or what you feel the market should do, but what your data has shown the market is most probable to do. All right. That's law number 17. Law number 18. Learn to be organized. Oh, man. Oh, man, this was a big one for me, man. This is a big one for me because even growing up as a kid, I was never organized. And I just used to make the excuse, I know where everything is, or I still get good grades, which may have been true, but I still failed to accept the fact I lacked discipline. And it took a lot of capital loss from trading for me to understand how important it was to write things down and be organized. Because yeah, it's easy to say, oh, okay, I know what my rules are. I ain't got to write them down. But then ask yourself, if you know your rules, why in the hell you ain't following them bitches? Excuse my language, because I'll be telling myself that if I know my rules, why am I not following them? It's because you lack organization skills, which stems from laziness and lack of discipline. Because it probably takes 2 seconds to write them rules down, but you don't want to do it because you feel like you know everything. How many times you gonna keep blowing accounts before you stop being lazy and do stuff you don't feel like doing or don't see the need to do them. You know, because if I only did stuff when I felt like it, I would probably be a fat slob on the game all day. Just keeping it honest with you. That's law number 18. Learn to be organized. Law number 19. Avoid judging yourself on one trade. This one pretty big too, man. Because big losses and big winners, they tend to have a way of affecting our confidence as traders. A big winner might have you overconfident, and a big loser may have you underconfident. But as a trader, you have to always play the game of probabilities as objective as humanly possible. If you know over a series of trades that you'll become a profitable trader based on your back-tested results, and why you tripping over one loss? And on the flip side, why you acting like you 100% from the three-point line just because you caught a 1 in 30? It's important to always reset and remember what your edge is in the market. And always play the long game, no matter how long of a losing week or a winning week you may have. You got to always play the long game over a series of 100 trades. What's my data? Come on now, keep it objective, not how you feel. I feel like I'm the best trader out because I won 3 1 to 30s back to back. But what's the truth? Well, 70% of the time that may happen. The other 30%, I may lose. I may lose the next 30 trades in a row based on my data. So let's go to law number 20 though. Law number 20, always dig deep and dissect your trading problems. This goes back to the most important thing, which is awareness. You keep losing, but as a trader, do you even know why you keep losing? If it ain't the strategy, what is it? Or you're an over trader. Okay, well, let's start by limiting the number of trades you take in a day, and also limit the amount of time you allow yourself on the charts. Oh, you got FOMO issues. Okay, well, why do you fear missing out on a trade? Is it because of the money you may miss out on? Then that's an emotional attachment you have to money that you truly need to fix. And also, you may need to stop trading for the day after you miss out on a setup. That's something that a lot of people who have FOMO issues need to incorporate. If you miss out on a setup and you know that you get kind of emotional after missing out on a setup, just close the laptop, man. Just close that laptop and say, I'll trade tomorrow. Because you know, after that point of you missing out, and you know that's something that makes you tick, you might as well get off the charts because you know the rest of the day could go horribly because you're going to be steady trying to compensate for what you think you should have had. Everything always comes back to some type of problem with yourself, and you have to come up with a solution that can be turned into a trading rule to fix that problem. Law number 21, never set any daily money goals. This was also important of mine's. This was also a problem. This was also a problem of mine in the beginning. You got to ask yourself this one simple question. If I don't hit that money goal, then what? You see, a monetary goal literally goes against the grain of disciplined trading rules. Good trading rules don't have anything in them to do with, oh, you have to make this amount of money today on the charts. Trading rules usually give you a max loss amount you can lose in a single day. It also takes away from being objective because if you have a subjective monetary goal on something you want, that doesn't necessarily have to be a true or false in a market that is always moving in true information, you're setting yourself up for long-term failure. Because yeah, you may hit that goal Monday and Tuesday, but what about Wednesday? There's so many things that can go wrong when you set monetary goals, which includes every emotional impulse, FOMO, overtrading, revenge trading, and all that leads to self-destruction as a trader. Law number 22, take responsibility in all situations. This is usually a beginner's issue where someone will tend to blame the markets or blame NFP week or even blame their strategy or even their mentor on why they losing. Self-accountability is extremely important when it comes to trading. At the end of the day, the world doesn't owe any of us understanding. So when you have a losing day, you have to take responsibility for it. If you followed your rules and lost, to me, that's still a winning day in my book because you stuck to the plan. You was disciplined. But if you didn't follow your rules, take responsibility for it, own up to it, and figure out a way to stop being undisciplined. That's all it is to it. You got to be responsible for your actions at all times. Law number 23, don't try to make back your money after a big loser. I mean, this ain't nothing but the pure definition of revenge trade. And this is also why it's so important to have rules that are set by you to deter from revenge trading. If your rules say take only 3 trades a day, and your third trade you happen to lose more capital than expected, does that mean taking another trade to try to break even? Hell no. It means you have to hit your max. It means you have hit your max trade limit, and you can try again tomorrow. A lot of these rules always come back. A lot of these rules always come back to trading rules you should already have written down and be following to a T. If you hadn't noticed that by already, you should already know not to be revenge trading. You should already know not to be over trading. You should already know about FOMO and a way to. I just taught you a way to fix it. If you have a trade that you missed out on, it looks like a very good trade instead of just pushing up without you and pushed up 40 pips in 30 seconds. Man, close that laptop up. Law number 24, learn how to adjust and adapt. When you're being objective at all times, you have no choice but to adjust and adapt. Only time you'll have trouble with that is if you're ruled by your emotions and your own personal biases, and in trading, it ain't gonna cut it. Anytime when I was trading, I had a strong bias about the current market and didn't want to adapt to what was really happening, 9 times out of 10, an account got blown out the water. But if I would have just adapted and seen that the market was shifting bearish or bullish, I probably could have caught a very big trade and avoided unnecessary capital loss. So yeah, you have to learn how to adjust and adapt because the market is literally doing it every day, adjusting and adapting to different economies, currencies. Law number 25. This is the last law, man. Last but not least, as they always say. Always focus on what you can control. You can't control whether the market is going to go up or down. You can't control whether your trade is going to be a winner or a loser. You can't control the actions of people around you. You can't even control whether that job you want is going to hire you. But what you can control is your own actions. You can control if you enter the trade or not. You can control if you put a stop loss in. You can control if you follow your rules or not. You can control whether or not you're going to work out today, whether you feel like it or not. Once you understand and learn how to fully focus on the controllable things in your life, being disciplined with trading will come a lot easier. The first step is understanding what you can and can't control. So yeah, man, those are the 25 laws of trade, man. Shout out to Day Trading Addict. Like I said earlier, man, these are his laws. I just put my own personal input on those laws, on what I think of those laws. You know what I'm saying? So yeah, like all the other YouTubers say, man, like, comment, subscribe, man. I keep dropping content, but if you don't like, comment, subscribe, you won't be getting shit else from me. Goodbye.